Good morning, good afternoon, good evening, and welcome to the big show. This is one of the biggest FOMC reports in years. So we are ready, we are ready, we are ready. We are prepared, we've made our moves, we've got cash on hand, we are invested, we've studied, we've researched, at least I have. I hope you've done the same. Okay, let's get ready to rock and roll. It's going to be a very, very big day. Very exciting. Looking forward to it. And it should be a very interesting afternoon. Are you ready, everybody? Over there on TikTok, the FOMC report is about to begin. So, buckle up, subscribe and ring the bell, get ready and give us a thumbs up. We will give away a cash prize if we hit 100 likes during the show. We are now starting. We've got 12 likes, just started. So smash the like button. Let's get ready to go. There's 31 straight away in the show. It's going to be a big one. We had 6,000 people once on one of these shows. Our biggest ever show was the FOMC report. We had 6,000 came through the show. So smash the like button. We've got 33 now. If we get 100, we will give away a cash prize during the show. Okay, here's my position. Here we are right now. We are down very slightly. We've been gaining a little bit. Motorsport games, I put a video about this. It was a complete and utter joke. I told everybody about it. A video came out. Look below my videos to have a look. The S&P is starting to come up. It's a little early, nothing happening yet. Virgin Galactic is coming back up. Virgin Orbit, I was down 24%. I'm now down 10.7. I doubled up my position on my Roth IRA and long-term position, and I've lowered my average now down to 10%. So I'm very happy with that. Rivian is moving up. Tesla is up. Lucid is moving up. Another one of those stocks I talked about earlier on today. Apple is now down but pushing up. Still not cheap enough for me to buy it. Amazon, I trimmed off the top for all these. Let's go America, says Brett London 369. Welcome to you. Let's go America. Welcome. We've got a new guest here, Jose from Turkey. This is breaking news for cannabis. What is happening? Mr. Lucas, I just heard from my sources that since are discussing marijuana reforms, something soon will happen. Please load up on Tilray. I have a total of $50,000 in shares. Mohammed Kahine, let's have a look at Tilray. Breaking news, apparently. It's down at the moment. I'm up 13% on it. It's a big enough position for me. I'm not going to spend any money yet until we see what happens with Jerome Powell. 25, come on. Okay. Welcome, Brett London. How are you? Lovely to have. We've got a guest in. Would everybody please put their cities and countries in and welcome our guest, Brett London. Welcome to you. My name is Martyn Lucas, voted World Piano Man. I do a lot of music on my other channel. It's on the homepage of this channel if you want to go and have a look. But I've released a video the other day where I was with Paul McCartney. Did you see that? And the Ukrainian army as well. Lots of stuff on my music channel. Go and check it out. And if we get from our members super chats, we do put music into our shows sometimes as well. All right. Welcome to you. We're live 10 hours a day, 5 days a week. And we have officially the highest engagement rate of any channel on YouTube where it's live viewers who are members. 95% of our live viewers are members. The highest channel, the highest engagement of any channel in the world. We're very, very proud of that. Okay, let's get ready. So countdown to FOMC rate. We are listening in. We are watching all the wires. I've got my Bloomberg feeds. Everything I need. We are ready to rock and roll. Okay, let's get ready for it. Very, very exciting. Andrew, I know, but it will get done. Well, let's hope so. Let's hope so. I'll be waiting. If I don't get any major buys this afternoon, maybe I will buy Tilray. Don't think that'll be affected too much by the rate decision. Other stocks will, not so much that one, I don't think. All right, let's bring all our comments on the screen. We've got Mohammed Kahine, good afternoon, one of our gold members. Malcolm, how are you, Malcolm? We've got a guest here. Would everyone put their cities and countries in? Welcome, Brett London. I'm from Cornwall in the United Kingdom, and I'm here in Dallas, Texas from my studio. We got a guest here from, it looks like London, Brett London 369. You don't know. Maybe he is, maybe he isn't. I don't know. Anyway, here we are. This is my overall position. Everything is primed, ready to rock and roll. I am ready as ready could be. I've done my research. I've done everything necessary to prepare for this. Right, let me have a look. We've got, let's have a quick look. We've got 18 likes now. 18 likes now. If we can get 100 likes, we'll give a cash prize away during the show. All you got to do is like the video. Let's put a minute on the clock. We've got 33 watching now, so let's get ready to go. You ready? 1 minute on the clock. Let's go over to it. Let's smash the likes if you want to make some money this afternoon. If you want to win some money. Here we go. Let's have a look. We're zooming in now. 18's gone to 19. We need at least 30 and we'll be 20 already. If we get to 100 by the end of the show, we'll be giving away a cash prize. 21. Fantastic. There we go again. Over there on TikTok, welcome to all of you. Got over 500,000 people now I reach across all my platforms. We're on TikTok, Twitter, LinkedIn, Facebook, multiple websites. Of course, our home is YouTube, and it's great to have you all here. 24, 25, 20 seconds to go, 26. Let's get our record. 140 likes was our record. 6,000 through a stream once. That was our biggest ever show. Okay, 10 seconds to go, 26 likes. There we go. Not too bad. 26. We're stuck at 26. All right, we'll come back to it. As long as we get to 100 by the end of the show, we'll give a cash prize away. Very, very nice indeed. Thank you very much for taking part in that. All right, let's get to it. 32. Let's get back to it. The FOMC report starts very, very soon. We'll be here. You're all waiting for it. It'll be here live on the show. Okay? We've got no news yet. We're just waiting for Jerome Powell to take the stage. Our overall position, Motorsport Games, we talked about this one earlier, absolutely crazy. The S&P is going sideways. Virgin Orbit was a very good move for me today. What about New Era Energy? It has drifted lower. I wouldn't mind buying some more, but I've cancelled my buy orders because I want to be able to be flexible to spend money at the right moment, at the right time. Okay, let's read the comments. So we got Malk. Let's get ready to rumble, he says. Mr. Lucas says it's $40 stock, and if it goes to $40, that's $2 million for me on Tilray. Fantastic. Jose, how are you? From Turkey. I'm from Cape Town, South Africa. Baron Yanley. Welcome, Brett, from Truro bus station, Cornwall. London, born and raised. What's happening, mate? All right, my handsome, my booty, my lover, Brett London. I'm from Cornwall. My dad was actually a true Cockney, a real Cockney. He was born in the sound of Bow Bells, Paddington Station. My dad was a genuine Cockney. He's not alive anymore, but there we go. Android Ring has just followed us over on Twitch. If you go over to Twitch and you subscribe to us using Amazon Prime Gaming, it's absolutely free. Oh, hello. Hang on, we're getting the bot attack again. So we're getting the bot attack. So we need to get rid of the alerts a minute. This happens sometimes. We get lots of, there you go. We've got this silly, I can fix alert, gone. Just like that, I've taken care of it. I don't know why we get these bots do that. Anyway, Marian Kakalowski, how are you? From Macedonia, welcome to you. Nitz Farrell was 21. Jose, 33 watching. I get 100 likes. Mate, it's fit. What's it now? 26 likes now. We're moving up. George from Oxford, I say Feds will do a soft landing. Anyone gambling on FOMC? Bot attack, says George. Absolutely right. We've got it under control. They won't ever win here. We're not interested in bots and scammers and lazy people. Just the real deal here. Okay, let's have a look. Let me check my wires from Bloomberg. No news yet. As the moment Jerome Powell takes the stage, you will get it all here live on the show. All right, Fed Jerome Powell is in the house. Okay. We will get him. Yes, Mike will take care of it as well. Thank you, Mike. All right, listening in. Let's see what our situation is right now. Let's have a quick look. Let's bring everybody up to date right now with our first commercial break of the afternoon. I'll be back in 10 seconds from now. Here we go. All right, if you are a YouTube sponsor, you can be in this space. You can actually sponsor the channel, $99 a month. You can get into 500,000 homes. There you go, in the gap just there. All right. Porch Group Inc. slowly but surely, says Jose. Let's have a quick look and see where we are right now. These are all the videos of what's being searched. What have we got here now? I'm going to take off Twitch if this continues. Yeah, I'm just going to delete Twitch if this continues. We're not having silly bots coming on the show. Absolutely, you're wasting your time. Don't know why you're bothering. So they can see what everyone's searching for. I put these videos out. Look, just a few moments ago in the last hour, and they're all zipping up the charts now. But the Fed report is, as you can see at the top, getting the most attention. No surprise there at all. Let's have a quick look at our subscribers. 6,188 now. We've moved up one more subscriber since we started. Let's see how that finishes throughout the day. 28 likes now, 33 watching. We'll come back to that in a minute. We're waiting for Fed Jerome Powell to take the stage. It's not happened yet. We've got $1,200 to spend on my extra funds. That is ready to go. And I can sell something as well if something pops. Very exciting afternoon. Who's excited? Right then, we've got 499 members now of our Discord channel. When we get 500, we will be a public channel. Who is going to be our 500th member to join? It's free to join. If you are a YouTube member, you get a lot more perks and benefits, but it is free to join. There is Discord. Put it on the screen. We're waiting to get 500. We're at 499. One more, and we'll be able to share with you our $1,000 to $10,000 crypto challenge as well. All with you. Very excited. Very excited about that. We're at 499. I'll be watching it very closely, and when it goes there, I will let you know. All right? We're getting lots of followers on Twitch this afternoon. If you keep doing this, I will just take it off completely. We won't have any Twitch followings at all. There'll be nothing there. So I wouldn't keep bothering. When is the report? The report will come in 15 minutes, and Jerome Powell will take the stage in 45 minutes. So you'll have it all here live. You won't miss a thing. Okay. Any trades made on the crypto challenge? Not yet. We are waiting to buy crypto. We know it's going down. We are waiting for the right time to buy it. We have our money held in our account, ready to spend it. We're not going to spend it until we are ready. Mohammed, what do you think about Jerome Powell? What do you think? What do I think about him? I haven't got an opinion on him at all. We are all expecting 0.25, but we could be surprised. And some people are getting a little bit excited, going, the markets are going to pump at 0.25. Not necessarily. We've already priced it in. There will be some profit taking, and then it will bounce back. So 0.25 doesn't mean it shoots up. There are only two certainties. Well, three, actually. Three. If it's 0.5, the markets crash 5-10%. And that could happen. It was 0.5 last time. So that could happen. That's why we've sold some. That's why we've got some cash on hand to buy dips. That's option one. If we get 0.5, that's what will happen. If we get 0, he's pivoted, and there's no rate hike this month, then the markets will explode. If it's 0.25, nothing much, a little bit up, a little bit down, whatever. No major deal. Okay. However, this is the crux. If it goes 0.25 or anything else in between, and then says we're going to have 0.25 for the next month, 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 that's the same as a 0.5 times 2 or 3. So it's about what he says in the press conference when he deals with the press. That's more important than the announcement that will come in 15 minutes and 15 seconds from now. So there you go. I like the idea of trim. Yep. Take some profits off the top. 45 minutes. I'll go drop the kids off at the pool then. A recession followed by last 5 instances when inflation peaked. A recession followed the last 5 instances when inflation peaked above 5% in 1970, 1974, 1980, 1990, 2008. Inflation has gone above 5% in 2022. There's 22 with his history. Thank you so much indeed. I like the idea of trim then. Soft landing looks statistically unlikely to say the best, says 22. Okay, there's all your information from everybody. We're at 499 still on Discord. One more person and we will be a public channel. There's Discord. Click on it and then we'll share with you our 1,000 to 10,000, our 7,000 to $100,000 crypto challenge. Okay, let's get ready. Motorsport game, we saw this afternoon, a bit of a joke, this one. The S&P is down 0.49 at the moment. We're prepared. We sold off the top. Right thing to do. Virgin Galactic, Virgin Orbit. I bought the dip this morning. Very, very good. I was down 24%. I'm now down 10.43. I also bought Next Era Energy. It's going sideways at the moment. I'm still down on it 4%. I'm not buying any more now until it goes a lot lower. All right. Okay. Bitcoin this afternoon is down 0.28. Not doing anything really. Tilray is going back down again. It's going back down again. I'm up 13%. Just an article. Virgin Orbit got another investment from Richard Branson. Very, very nice indeed. I told you Richard Branson would not let Virgin Galactic and Virgin Orbit fail. It's a long-term play, though. It's not short-term, but that's why this morning I used that money and I lowered my average. Virgin Orbit, you can see, is going up as we talk about it, actually. Very, very pleased with that position. I'm still down 10%, but that is okay. That is okay. I was down 24. I don't need any more shares than this because when this goes to $4, you can imagine what I'll be up there. You can see yourself, and that's all I need to really worry about. So I'm not buying any more, not loading up unless it goes even lower. All right. That's enough. Don't need any more risk than that on my portfolio. All right, let's go and check. We've got 12 minutes or less than 12 minutes to go. 12 minutes to go, and there's 35 watching, 28 likes. So if we get 100 likes during the show, there's a cash prize. We've let me just check what's big. We've got 85 now through the stream. Jerome Powell just moments away. We are waiting for it. We will be covering it. Hasn't happened yet. We've got a little bit of a break to go, 12 minutes or so. Very exciting afternoon. Okay. And we are also covering the Meta earnings after hours tonight as well. All right, Meta earnings after hours. Let me refresh the screen and give that to you. Here it is. Here's the Meta earnings after hours. We will be covering that as well. Okay, so we're covering the Meta earnings as well. So we're getting ready. We're down 0.82. I'm happy with that. We've had an amazing run. We've had 4 weeks in a row. My portfolio has been making money. I'll share with you my portfolio. Look, this is all my money on the screen. Year to date, we're up 9.1. Absolutely awesome stuff. Really, really great. Very, very happy with that. And our overall portfolio now, together with my with my brokerage and my Roth IRA, 35.9 is 40,775. We want to be at 41,000 today to justify the investment I made this morning. Non-farm payrolls Friday morning to Martyn. That will be a big one. Non-farm payrolls Friday morning to Martyn. That'll be a big one. Thank you, 22. I will take note of that and check my calendar, economic calendar that you gave me. Absolutely brilliant. All right. So we're getting ready. Not that long to go now to wait. Recovering, not making, like my portfolio. Recovering, not making. Yeah, that's what it's all about at the moment. Just buying lower and lower prices to make money for the good times. That's what all we're doing now. The S&P is going sideways. It's that the markets have now gone muted. Virgin orbit going up and up. I don't think this will be affected too much by what he says today. I bought this morning, and I'm glad I did. I bought this morning at 163, and we're 166 now. In my Roth long-term position, Rivian, Tesla, Lucid, Apple, Amazon. We trimmed off the top, right thing to do. Tilray, we talked about it, still down at the moment. Meta, earnings tonight, we're covering it. This is Meta earnings. It can only go down from here. They've exceeded the expectations has been increased. And so to beat expectations when they lost on the last one, and we've increased the target, could only spell Meta going down. In my book, that's the way I read that. What do you think about that? Okay, we've got 9 minutes to go. We are waiting. We'll get the Fed rate. Not any moment now. It's 9.5 minutes from now. We will have it, and then we get Jerome Powell take the stage. I will bring it to you live in 8.5 minutes from now. We are listening in. I've got all my Bloomberg wires. I've got everything I need ready to rock and roll. And we are watching and listening in to everything you need. Okay. I bought VFF at 0.97. It's now 112. 100,000 shares. Sometimes you need to buy the stocks that none are talking about. It has a buying rating of 78% cannabis company. AKA going nuts. Had gone deeper on this one, says Nitz Farrell. Cannabis is the future, says Mahatma Kahin. We've had 90 now through the stream. Everyone's getting ready. Everyone's getting ready for it. Not that long to go. And we'll be there. Not long to go now. Watching very, very closely. Who's getting excited? It's a very exciting afternoon, no question about it. We'll keep our eye on all the stocks. Not that long to go. You won't get the news as fast as the algos can read it and trade. The market condition will be the place to look for the news. The market direction, exactly. Oh, exactly. Exactly. Hello, I'm here, says Flutter Edits. Hello, how are you? Lovely to have you here. Okay, we're bringing you some extra information on the screen. Some traders on crypto challenge, just not for the 1,000 to 10,000 long-term portfolio. You can join the Discord to see some trades on crypto challenge, just not for the 1 to 10,000 term portfolio yet. You can trade, you can join the Discord to see them. Okay. There you go. Ali Tizro's just mentioned that. We'll be talking about that today, actually. I've just put a video out. The crypto challenge. Did you see the video? Just went out about 15 minutes ago. It's just already gone out. Okay. We've got 5 minutes to go. You will see the markets react before we actually hear anything. We know that. That's the way it always goes. So let's have a look at what's being searched. Yet FOMC is being searched number 1 on my channel. 6,189. This could be a massive afternoon for our channel. We are now at 43 watching. Smash the like button. If we get to 100 likes, we'll give a cash prize away. Subscribe and ring the bell. There you go. Smash the like button. If you do that, we're giving away a cash prize in the show. Okay, so let's bring this up to date. A minute. There we go. That's better. Right. Let's zoom in. Give you a 1 minute on the clock. We got 30 likes now. There we go. We got 41 41 watching, so we should have 40 likes. When we get to 100, we'll give a cash prize away. So smash the like button. Are you ready? And here we go. Here's Mr. Mini-Me. We're up to 30. We should get at least 31, 32. When we get to 100, we'll give away a cash prize. Awesome stuff. 30 seconds to go. We've got 4.5 minutes before we get the rate. 32. There we go. Just 26 seconds to go. Smash the like button. Mr. Mini-Me says smash the like. 5.5 minutes to go before we get the rate. Very, very exciting stuff. 32. If we get to 100 during the show, we will give away a cash prize. All right. There are now 42 watching, 32 likes. Let's get back to our position here. Okay. This is my actual money, my real trades, my real positions, all the money I have in the world live on the show in front of you. I can show you my bank account. I've done that many times on the show. Everything is real. We're on LinkedIn, Facebook, Twitter. We're over there on TikTok. Welcome to all of you. Join us on YouTube if you want to be part of our cash giveaway. We do it every single day, 10 hours a day. These are all the positions. The S&P. It's getting very exciting right now. Here we go. You can see my portfolio is just starting to rise. I got $1,500. 3.5 minutes to go. Getting close now. Is it blurry for everyone? Queen, all you've got to do is click the cogs. Click the cogs and turn up the resolution. You can go up to 4K, Super HD. I want to share with everybody, because not everyone realizes that. If you've got low quality, you can do this. Click the cog. It's because of your internet, it's selected a slower speed. Go to auto, and then look, all the way up to Ultra HD, 1440. And when this video is rendered, it will be in 4K. So you can click that one right at the top. I'm going to choose 180 because I'm only using it as a monitor. Okay? So no need for it to be blurry. It's blurry because of your end. Okay? Zero rate hike pivot starts today. You'll be lucky. Right. Here we go. Any second now. Two minutes to go. 2 minutes to go now. Let me just tweak that a little bit. Just change this dimension a little bit. There we go. 2 minutes to go. Good luck, everyone. Hopefully you've trimmed off. Hopefully you've taken some profits out of the game. And hopefully now you are ready to buy back in if it goes down. If it goes up, you're 90% invested, you'll win. If it goes down, you've already done it. You've got literally 1 minute, 30 seconds to take profits. After that, it's over to Jerome Powell. He's now running your portfolio. Are you ready? Okay. We're listening in.
We all know that. But there's a massive history here of central...
1 minute to go. We're listening in to Bloomberg. We're watching all the wires. You'll see it on my portfolio anyway. Remember, if it's 0.25, it could still drop. It doesn't mean it's just going to go straight up. It's already priced in. Once people know where we're going, then they'll take profits. So don't think just because it's going up, sorry, if it's 0.25, it's going to shoot up. It might do, but then there will be profit taking quite quick. We've had 4 weeks now of a rally. It's a bear market rally. If it's 0 or 0.5, get ready for some massive moves. All right, here we go. 25 seconds to go. 25 seconds to go. Smash the like button. Be part of it. Here you go. Any second now. 10 seconds to go. There might be a few second delay.
We are about a minute away from the Federal Reserve decision, looking for 25 basis points. It seems like the market's been leaning towards that outcome,
right,
and it's been widely endorsed by Fed officials, Tom.
Any
over
second
the last couple
now.
of weeks, and the Fed's
Any second now. Watch the markets. Right. Watch it move. There could be a few seconds delay. Any moment now. Oh, it's moving. Remember I said it can go down. Just because it's a 0.25 does not mean...
We do. I mean,
does not mean it's going to go
up.
up.
I think the heritage of this from
the market is moving, not much.
It's more likely that people wanted 50 basis points.
It's going down more. 0.25.
That was more aggressive.
No, I clearly think
0.25. Now it's all. Remember, I told you 0.25. It could still go down. It looks like we've got 0.25. That's now been sent in by 22, and it does look that way. The market isn't crashing. So it's not to a 0.5, that's good. But remember I said it would still go down. There'll be profit taking because people now know what is going on. And that's what we want. Okay, please show the video. I will put some information on the screen for you. Here we go. Let's bring some sound in here.
You go 450 from 425, 475 on the upper bound, 450. So that is a 25 basis point hike from the Federal Reserve. I'm going to bring up the statement
0.25
just quickly and work through this one, and then Mike McKee's going to join us. Here is the statement.
Who said they want the video? The video hasn't started yet. The video, Jerome Powell presentation hasn't started yet. He speaks in half an hour. That's what's important. The rate hike is only the first part of the story. Okay? That is good news so far. Good news so far. What's important is what he says. So, let's go through all our stocks right now. No pause yet. Exactly. What we want is a pause. The good news is when we get a pause. Let's go through our positions right now. So we're going sideways, nothing dramatic. But what happens is Jerome Powell speaks in 28 minutes. That is the important part and what he says. Remember, that is the important part. Let's go through, have a little look now. So the S&P is going down. We're pretty much sideways at the moment. When he talks, it will move. That's what it's all about. That's what it's all about. So, I'm not going to buy back in the S&P yet. Virgin Galactic, no, not yet. Virgin Orbit, no, not yet. Rivian, no, not yet. Tesla, no, I want to get that cheaper, so not yet. Lucid, no, not yet. It's got a long way to go, more like $9. Apple is going down, but not yet. Amazon, I trimmed all this off, remember, so I've got profits. McDonald's, not cheap enough yet. Coca-Cola, no, it's not cheap enough for me yet. It's got to go down, where I'm actually down 1 or 2%. J&J, all day long, it's been going up. Look at that. Absolutely fantastic. We told you it would. Safe money's gone there. I predicted that, exactly the way that would go. Google, not cheap enough yet. Microsoft, not cheap enough yet. Walmart, no, not cheap enough for me to buy. So I'm still holding my $1,200. The market is selling off like we said it would. At the moment, I might go into Next Era Energy. To be honest, at the moment, I might go into Next Era Energy. The way that's looking, to be perfectly honest, I might go into that. At the moment, I might just go into Next Era Energy. At the moment, it's not cheap enough, though, for any more investment. Enphase, Bitcoin's going down, but not much. Tilray is falling down. I'm not going to buy any more. So nothing yet has gone cheap enough for me to buy. SoFi, ridiculous. We're not getting rate hikes. They said we'd get 2 rate hikes. I'm surprised that this hasn't started selling off yet. These people made up absolute ridiculous stories when they came on and said the rate hikes are going to go down. 2 rate hikes this year. Rate cuts. I apologize. Canoe, no. Ford, going sideways. Rio Tinto, it's got a long way to go. No. So Meta, no. So no buys. I'm saving $1,200. Nothing has popped out for me to buy it. Nothing. Jerome Powell will speak in 24 minutes. I will cover it live on the show. He doesn't speak yet. That's what it's all about. Let's bring in the comments here. Could you have deployed the crypto and made a nice profit today? FOMC statement. There it is if you want to go and check it out. Thank you, 22. Ongoing increases in the target range will be appropriate in order to maintain a stance on monetary policy that is sufficiently restricted to return inflation to 2% over time. ongoing increases is in the target range. No pause yet. Buy Tesla. No. Why on earth would you buy Tesla when it's pumping up? That is the worst time to buy Tesla. Absolutely insane. Arnold the Palmer, crazy. You buy Tesla when it goes down. It's at the top of its range right now. Elon Musk is about to sell it. We've got cash flow issues. They are getting some more finance in order. If you go out and buy Tesla now at 174 when you could have bought it at 110, you must be barking mad. I will buy it when it goes down, and if I miss it, it doesn't matter. My money can make money elsewhere, but the profit in that to where that's going in the short term isn't worth it. So not touching that with a barge pole just yet. Right, this is all good so far. Going sideways, I trimmed. It was the right thing to do. I've got money on hand. I bought Virgin Orbit. That was the right thing to do. That's gone up since I bought it. That was good. And also Next Era Energy, it's just been going sideways. So I'm happy I've done it, but nothing yet. Don't buy a falling knife. The trend has changed. Don't buy a falling knife. The trend has changed. I'm not so sure I agree with you. Arnold the Palmer, you got 2 accounts there. What's going on? Right. Jerome Powell takes the stage in 23 minutes, and we'll have him live on the show when he does. You won't miss a thing. Let me see now if we've got enough likes to give away a cash prize. Let's have a look. We've got 132 through the stream so far. Very good. 6,190. We're going up slowly. Very good. And we've got 42 watching with 35 likes. So if you've just tuned in, when we get to 100 likes, we are giving away a cash prize. Click subscribe and ring the bell. And if you zoom in, you can see, look, we got 35. If we get 100, I'll give away a cash prize. So click subscribe, ring the bell, and give me a thumbs up. 35 likes. Just help us out by tapping the like button, and you're helping yourself promote the video and also a chance to win a cash prize. It's free to enter, free for all. We just did 100 likes on the video. Okay, back to our trading position. The trend is down, Arnold. Need a pullback above 100 and then make a new high before the trend is upwards. I totally agree. That's why I'm not buying Tesla right now. We're waiting for a pullback. It got overbought so quickly. All the fanboys came in, like Arnold the Palmer, and said it's all going up to $1 million, and everybody got excited. We are not investing like that. Okay. We are waiting now. This is good. So we got a 0.25 as anticipated. That's all good. But remember, interest rates are going up another 0.25%. It's not good, right? It's not good, but it's what the market was expecting. There you are. We're going up a little bit now. Looking at the rainbow BTC chart, I can't see more big dips, if any at all. I've used this for the last 2 bull runs and worked like clockwork. Good luck all, says Andrew Grady. Good luck to you, Andrew. I don't know if Ali Tizro is using a rainbow... rainbow. I've heard about that rainbow chart. I don't think he's using that. Anyway, good luck for you, whatever strategy you're using. The S&P is going up. This is it on my Roth. I need to change it to my brokerage account. There you go. It's 44% of my portfolio. I trimmed off the top. I'm not going to buy any more. That would be absolutely mental at this stage. Virgin Galactic's going up. Virgin Orbit. It's all about when Jerome Powell starts speaking. Don't be under any illusion. That's what it's about. Virgin Orbit was a great investment. Rivian. Tesla going up again. Lucid. NASDAQ is up, says T.O. Roll. Thank you very much indeed. You make it loud. You make it loud all now. Don't understand that comment. Right, we're going up quite quickly now. Apple is going up. I've got enough. Amazon's going up. Okay, great. We trimmed off that a little bit. McDonald's is going up. It's still not cheap enough for me. Very expensive. Coca-Cola. I'd like some more. In my Roth IRA, I've got more, but it's not cheap enough for me to buy any more at the moment. Anyway, J&J, as predicted, is going up. It's our solid stock. We're up to 35 likes now. If you get to 100 likes, we'll give away our cash prize. Jerome Powell speaks in 20 minutes precisely from now. Jerome Powell speaks in 20 minutes and we'll be playing it live on the show. Google's going up. Microsoft is going up. Walmart, Tesco, Next Era Energy going sideways at the moment. Nothing there. Enphase, Bitcoin doing nothing again. Tizro is down, but trying to push up. Robinhood. There's no buys for me. There's nothing I want to buy at all. I am already fully invested. IonQ, I don't understand. Those people, they said that the rates were coming down twice this year. Well, they've completely got that wrong. I mean, I think it was a stock manipulation, if I'm honest. Everybody knows it. The stock was on its arse, so it was like, let's promote the stock. I hate when people do that. It's just ridiculous and whatever. Right, let's have a little look in now. Jerome Powell, he'll be on the stage in a few minutes, and I will cover it. He's not there yet. The FOMC report. We are covering it live on the show. We're waiting for it to begin. The stocks are doing well at the moment. They've rallied up nicely, but we're not going to jump in right now. We're already in 90% of our money. We're not just going to jump in. Fed Powell will speak in a minute, and we'll be there live for it. If you're coming up to retirement, why would you want to risk your pension in the casino when you can sit back and take 5% from the bank and keep all your cash? Let me give you a quick update. Here's the stage set for Jerome Powell. There is the stage, as you can see. We will be there live in just a few minutes' time. We'll cover it live on the show. And you won't miss a thing. All right. But not there yet. We'll be there as soon as it's available. It'll be another 15 minutes yet. The first three statements were very bearish. Hopium is holding this market. It's why we're not buying the pumps. We're only buying when things go down. The S&P is going up, looking good. Virgin Galactic is going up, looking good. Virgin Orbit is going up. My Next Era Energy still isn't making me any extra money yet. But it's where I bought it in this morning. But I've improved my position a lot today, so I'm very happy. I've gained more shares. I've got more cash on hand. Now we know it's 0.25. What I want Jerome Powell to say something really horrible, drive it down so I can pick it up. What we don't want him to say, though, is it's going to be going, we're going to have 0.25 for the next 5 years. What we want is one more, and then we want to start seeing it go to zero. That's what we want. Stephen Lewandowski has just made a comment. The Fed is going to keep rates elevated for the foreseeable future. Not a single member of the Fed Open Market Committee expect rate cuts in 23. There you go. That is when the markets will drop, when he says that. If he says that in that tone, then the markets will drop. That's why we're not buying the pump. What's happened now, why it's gone up, is we know it's 0.25. People have bought in. Retail investors have bought in quite probably. And then the big investors will sell that in a minute and go back down again. So you get caught with your pants down because you think, oh, it's all going great. No, it's not going great. Someone tell SoFi board. Yeah, exactly, 22. I agree with you 100%. So Jerome Powell is just 15 minutes away. Let's see our position now. See if we can give away a cash prize yet. We've had 158 through the stream, look by the looks of things. We're now up to 6,190 subscribers. I said to you today, let's get to 6,200 during the show. I think we will. All right, we've got 54 watching now. Look, Fed Jerome Powell speaks in a few minutes. We're waiting for it. If we get to 100 likes, we'll give away a cash prize on the show, the money I make in the video. There's 38 likes, 53 watching. You ready? Let's get 40 likes in 1 minute, and then we are 40% of the way. Ready? Here we go. Smash the like button, and we'll give away a cash 39. Here we go. Mr. Mini-Me, come on in. 39 likes. Let's get to 40 likes, and then we'll be 40% of the way there. There's 40. We got 40 seconds to go as well. Excellent. How many are watching now? 52. 41 likes. Get to 100 likes, we give a cash prize away. We've got 14 minutes to go before Jerome Powell takes the stage. He's already sitting down now behind the scenes. Right, okay. We've got 42. That's pretty good. I'll leave it like that for a minute. We'll come back to what's going on. Thank you so much indeed for that. We got 56 watching now. If we get to 100 likes, we'll give a cash prize away. We're waiting for Jerome Powell to speak. He hasn't yet taken the floor. When he does, here's the stage. We have the stage set for Jerome Powell. He's not there yet. When he comes onto stage, you will get it first here live on the show. All right. We're not there yet. Okay. Excellent stuff. It's very exciting. 13 minutes to go. And we are also going to give you information this afternoon how you can be in our Discord challenge, our crypto challenge, which is $1,000 to $10,000 or $7,000 to $100,000 challenge live on the show. Our crypto challenge. Here's our Discord. We want one more person to join Discord, and then we'll be at 500 and we'll be a public server. There is our Discord link, and that's where we're going to share the information about our challenge. I'm going to do it live on the show, invest my own money myself. It's free to join Discord. There is my Discord link. There you go. If you want to be a member of our channel, please do. You'll notice that we have 95% of our live viewers are members, with the highest engagement rate for live viewers who are members on YouTube, higher than any other channel. Biggest channels in the world, 8 to 9%. We have 95% of our live viewers are members. Very, very proud of that. And there's a reason for that. We give 20 times back what you put in. Flutter edit. Someone makes a new Discord account and join. Yeah, $499. We'll get somewhere. We don't need, someone to create a false account. We'll get to 500 today. I'm sure we will. And then we get a public channel, and then we are on the next leg of our journey together. All right. Onwards and upwards. We'll get there in a minute. Okay. I'm pretty sure it'll be through this show. Jose Bankston is over on Facebook. Jose, join us here. It's got Shiba Inu. We've got Shiba Inu running on the screen at the moment. Join us on YouTube, and you can be our 500th member on Discord. And we're doing our crypto challenge live on the show. My own money, 7,000 to 100,000 or 1,000 to 10,000 live on the show. Here we go. Hands up. There you go. There's Discord. Okay. Starting to sell off again now. Jerome Powell is 10 minutes away. There's the joke investment today. If you took part in that, the S&P selling again. We're looking for some bargains. There's no bargains for me. Tesla is what I want to buy. I'd like to buy some Tesla, but not at the price where it is now. It's too expensive. Amazon, we trimmed it. McDonald's, I want McDonald's. Great company. It's getting better. It's not cheap enough, though. It's getting better. It's gone back to where it was when it built up to the earnings. It's a good company. It's solid, but it's down on the last 3 months. But I want it really down here. You want to get the dips like J&J, exactly the same. You got to have patience and wait. Coca-Cola, I wouldn't mind buying some more of that as well. J&J, exactly as we said, went up. Look, really, really good. That's really, really good. Just a slight tweak to that. There we go. Ten minutes to go. Google. There's nothing that's shouting out. Remember, I only buy my all-time lows. That's the way I do this. It's a simple strategy. I research what companies I want to own, and all I do is make sure I buy those companies at all-time lows for me. I can't go back 20 years, but what I can do is I can pay. If I've decided to buy a company and it's now less and the fundamentals haven't changed, I owe it to myself to buy it. It's common sense. It's obvious. No emotion, just basic fundamentals. I think Meta is setting up for a fall. It's going up too quick because they've exceeded expectations. They've raised expectations. The analysts have, and they're bound. I think they're going to miss it. I might be wrong, but I think they're going to miss it, and then this will drop down. I think this is a classic case of buying in and then dumping it. I think that's what's going to happen to Meta. We shall see. Right, a few minutes to go. Not that long to go now. Let's see, a long way to go. Near 5% interest, though. This can only end one way, in my opinion. 22. Right. Let's. We've still got our powder dry. We've still got our money left. We're still on 499 Discord members. One more, and we'll be. If you come on into the welcome all, I shall upgrade you to a YouTube member. If you are a YouTube member, that is. Right, 49 watching, 43 likes. Smash the like button. If we get to 100 likes, we'll give away a cash prize live on the show. 50 watching now, 43 likes. Very, very nice indeed. Welcome to all of you. We've got 8 minutes to go before Jerome Powell speaks. We'll cover it live on the show. This is where it's going to happen. This is where it's going to happen right here. There we go. We've got another 7 minutes to go, so we will have it. Not yet. They're just setting up all the cameras and all that kind of stuff. Very, very interesting. Let's see how many viewers we've got now. 49, 43, 6,190. I'm predicting 200 in our subscribers today. 6,200. 176. People are searching. That's the number one thing they're searching for. Okay, take a very short break. See you back in just 10 seconds from now. And if you are a YouTube sponsor, you can sponsor this space right here. Across to 500,000 across my entire network, you can be in this space here. All right, there you go. Come back to you now. 10 seconds. You can be in that space there. .5 minutes to go, 5.5 minutes to go for Jerome Powell to take the stage. Okay. Tizro, it'll be subtle, yes. Thing is, the Fed don't want the market to pump because it eases monetary conditions and it adds to inflation. Crypto's the future, says Ali Tizro. Ali, are you going to be in today? Because at the highlight of of the presentation, I want to promote your crypto challenge. And that'll be right at the end. I want to promote that. We're getting a good number. We're at 499 Discord members now. We're one away from a public channel. And I want to perhaps even have you call in as well, right at the end of the show, as we maximize the number of people that are in the stream. Anyway, 5 minutes to go. Just a few moments to go now. The eyes of the world are tuned in. I can see it. I'm looking at it. 3 minutes to go.
When the press conference begins, the chair will make a brief opening statement and then take questions.
We're listening in.
Please raise your hand.
We'll be right there for the whole thing. Meta's earnings, I think it's going to go down because the expectations have been raised and they missed on the last earnings when it was a lot lower expectation, and now it's been raised. So I actually think they're going to miss. I think everyone's buying it on the pump. It's a classic buy the rumor, sell the news, isn't it? That's what I think anyway. Okay, we're just seconds to go now. 182 through the stream, 6,190 subscribers. If we get 100 likes during the stream, we'll give away a cash prize. We're at 51 watching now and 45 likes. We're just waiting now for the Jerome Powell to take the stage. And we'll discuss it as well at the end. Okay. Here we go. Let's listen in. Jerome Powell will take the stage any second now. Here we go. I love the way they put the camera on the door. It's very theatrical, isn't it? Very theatrical. But watching the door. Anyway. Are you ready? Here we go. We're just seconds away now. In fact, we've got 2 minutes. 2 minutes to go. If you see an ad, make sure you skip it. There won't be any ads throughout the presentation, so there'll be no interruption. You ready? 1 minute to go. Let's bring you in. Nice to see so many bald heads around the room. Always makes me feel at home. All right. So, we're watching our positions now. Watching very closely. Thirty seconds to go. 0.25. It's all about now what he says. If we expect many more months of this, it'll crash. That's why we trimmed off the top. That's why we took profits. 10 seconds to go. Let's see if they're on time. Okay, it's showtime. If you've just tuned in, subscribe and ring the bell. Let us know you're here. Jerome Powell. Ladies and gentlemen, please welcome Jerome Powell, Fed Chair, who's about to destroy your portfolio. Thought you had some money for your pension? Well, you're about to lose it all. Hopefully you trimmed off the top. Hopefully you took profits. I hope you did. Just waiting for Jerome Powell to speak. We'll listen in. Surprising, he's late. Here we go. Showtime.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder, and could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Has your
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But you know, we'll update those forecasts in March.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Go to Colby and then Howard. Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward, or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those two options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas, of course, we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly, and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together, although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is, research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent inflation in that sector. which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Nick Timmeros, the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
Well, you'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria. Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization, in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Gina, and then Steve.
Gina Smilik from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? You know, could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, you know, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and I mean, you saw what the Bank of Canada did, and you know, they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you've penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may have been responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now, but that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior, in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down, and I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. It's a question. No one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023, and the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year, and that's my base case is that there will be positive growth this year.
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good. Second off, I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Walters suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence
So
metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. We're not, market participants have a very different job. And it's a fine job. It's a great job. In fact, I did that job for years, but in one form or another. But, we have to deliver that. And so we are strongly resolved that we will, complete this task because we think it has benefits that will, support economic activity and benefit the public for many, many years.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down. And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great, but we just see that it has to spread through the economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon. Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask a further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession. And we have inflation moving down, into somewhere in the mid-3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, we understand, I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And, you know, we kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that, you know, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in a, you know, in the Fed's monthly or, you know, post-meeting statement as an ongoing economic risk as opposed to, you know, a health issue.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. I wanted to go back to another thing that Fed Vice Chair Lael Brainerd said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. You don't see that yet, but the whole point is, you know, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And you know, so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day. You know, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are, you know, we pick that up in conversations, and I've seen some data too that show people are, you know, gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and, you know, high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that, you know, essentially. We believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, you know, and I think that's very reassuring. I think, you know, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way, it's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I mean, I'm not going to try to persuade people to have a different forecast, but our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer, but we'll see.
Go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
There we go. What an afternoon that was. Phenomenal stuff. Fed Jerome Powell. Wow. What can we say? What an amazing afternoon. Thank you very much indeed. Let's go and break down all of our stocks right now. We will end this show very shortly and go over to our closing bell. But what I think we're going to do is stay where we are a little while longer, and then we will go directly to Meta earnings. Meta earnings this evening is live on our show. Let me share with you. Meta earnings comes up at 3:30 in an hour and a quarter from now. So I think we'll go another 45 minutes, and then we'll take a break for Meta earnings. So we are back for Meta earnings. Let's break it all down. And let's have a little look where we are. So here's my position right now. You can see where we are right now. We're up today 0.88, and the S&P went up 0.92. Still right to trim. Here comes the selling, like I predicted. Virgin Galactic is up. I said all of this wouldn't really affect Virgin Orbit, and it didn't. Well, no matter what happened, that was going to be up there. So as you can see, I was down 24%. I'm now down just 9% because I doubled my position, and that's very, very good. Next Era Energy was the other thing I bought. I bought it here, made a profit. I'm holding it though. We are going to get a bit of sell off now. What Fed Jerome Powell was essentially saying was we're going to have continued rate hikes for the rest of the year. However, he was a lot softer. His tone was what was important. He indicated that he can pull back very quickly, which we already knew anyway. The markets already know that. I think the markets are starting to prepare for a surprise pullback, I would say. I wouldn't be surprised on the next earnings. It's a 0.25. Next report, 0.25. Maybe another 0.25, and then we stop rate hiking. I think it's around the corner. As I've been saying all year, late spring, summer will be a bull market. I stand by that. I think we've hit bottom in the market. I think that happened about a month ago. I think the rate hike was a month ago. So the bottom of the market was a month ago. Anyway, that's what I think about Jerome Powell's speech. Right. What we're going to do now is change tack, and let's have a quick look, see who's in the show. Let's have a quick look, make a few decisions. Yes, I'm looking at my numbers. I know exactly what we're going to do. Let's have a look. We're still in a bear market rally, but I think we're bottoming out. I think the bottom of the market has come. It's why I'm buying defensive stocks. My JNJ today did better than most of my portfolio of about 50 stocks. That's why my portfolio is up so much. Defensive. I've got the dividends. It's safe. I'm protected. That's pretty much why I've bought what I've bought. Anyway, let's go into a change now. We've got the Meta coming up later on this afternoon. But what I want to do now is something for all our new viewers. We've got 57 watching. I'm going to tell you now about a crypto challenge, $1,000 to $10,000 and $7,000 to $100,000. We're doing it live on the show. Who wants to be part of it? So, if that sounds good, click subscribe and ring the bell. Have you done that? Have you thumbed up the video? Have you done that? Okay, we got cash prize giveaway today. If we get 100 likes on the video, 100 likes. We are now at 51. Let me refresh the screen and let's see if we can do it. Put a 1 minute on the clock. If we can get 100 likes, we're going to give away 100 likes. We are, hang on a minute, what's going on here? We've just changed, what's going on? Just bear with me a second. We've just lost our feed. Let me get that back. We've just changed. There we go. That's better. Just for a moment there, we lost it. Right. Okay, you ready? 1 minute on the clock. Let's get to 100 likes. If we can get 100 likes on the show, we will give away a cash prize. You ready? Okay, here we go. Smash the like button and let me put on the screen so you can see exactly how many people. That's better. I apologize for that. I'm muted. There we go. Thank you very much indeed. We're about to do our crypto challenge, a 1,000 to 10,000 challenge, and 7,000 to 100,000 challenge. Smash the like button. There you go. 55. If we get to 100, we'll give away a cash prize live on our show. Okay. Here we go. Okay, we're not quite there yet. We're 54, 52 watching. Right. Are you interested in our challenge? Now then, I am going to do it live on the show with my own money. So you're going to see it all done. So we need to bring everybody up to date now. If you see a commercial break now, skip it. And we're going to show you exactly how we're going to do our crypto challenge. And I want to see, do we have Ali Tizro in the show this afternoon? Broadcast lounge is open, Ali. We've got some very exciting news as well. We've got some exciting news. We've just become a public channel. We've now got 500 people in our Discord, which means we are now a public channel. Let me just check this. I think we are. Let me just have a little look right now. I think we might be. Let's have a look. Partner program. Your server. Your server needs more members who visit and talk weekly. I think we are there. It's just got to refresh. Discord partner program. Your server needs more members who visit and talk weekly. We've got 500 members. It's just not refreshing it yet. It probably will tomorrow. It's just gone through. Might be a daily thing. Anyway, we've just Discord partner program. I'm very excited about this. This is really big news for our channel. Let me share with you on the screen. I think I can share with you this page here. This is the back end of my server. Look, we've just gone through 500 members. It says here your server needs more members. It's 500, so we should do it. It'll refresh tomorrow, and we should have a public server now. Anyway, that'll be great. Discord partner program. Very, very nice. Anyway, thank you ever so much, everybody. 500 on our server. It's pretty good, right? It's just over 10%, actually, of our, just under 10% of our subscribers. And we've only been doing it for, I don't know, 6 months. Incredible. So thank you ever so much, everybody. Let's see if that renews tomorrow. Anyway, so let's, if we've got Ali in the stream, he's not in the broadcast lounge right now. Let's see if he can be here. I don't know if Ali can join in. So our crypto challenge is this. We've got a crypto challenge, and this is exactly what we're going to do. If you want to be part of it, it's a premium service with Ali Tizro, who is one of our family members here on the show, but also he is a sponsor of our channel. Now, I only get involved with sponsors that will benefit you, benefit me, and benefit you, not just a money-making scheme at all. So let me explain what we're going to do. Ali has set down this challenge. I'm going to share with you on the screen. I've got $1,000 here. I'm on the $1,000 challenge. I know some of you are doing the $10,000 challenge, but I'm on the $1,000 challenge. And just looking at my portfolio, it's just gone up dramatically on here. Blimey. Yeah, I just noticed that. I'm 1,018 now. Anyway, let me share with you this. This is what we're going to do. Okay, this is the $1,000. In fact, it's 1,018 now. We're going to do a $1,000 to $10,000 challenge. Some of you are doing $7,000 to $100,000. I'm doing the $1,000 to $10,000. Ali's going to tell me what crypto to buy at what precise time. And when he says buy it, I'm going to buy it live in the show. Now, if you want to follow that information, all that information of what we're going to buy, when we're going to buy, what prices we're looking for, will all be on our server. So here is our Discord server. This will then give you, if you are a YouTube member, access to Ali's Discord server. And let me share with you what that looks like. Okay, this is Ali Tizro's tips. Let me show you right now. These are all the charts that we're talking about. Ali Tizro's tips will be in here. And you have a lifetime discount as members to my channel to his services. He will then do charts for you. He will answer questions for you. He will show you what we're going to buy. We'll all buy it together live on the show. You will see it all happen here live on the show. So that's where you get information from. So if you want to access this channel, you need to be a YouTube member. However, you don't have to be a member of mine to access it. If you don't want to be a member of my channel and you'd rather go directly to Ali, you can, but you won't get the lifetime discount. Now, my lifetime discount means my membership is virtually free. So it's a great way of doing it. However, should you decide to go directly with Ali Tizro's service and you don't want to be a YouTube member of mine, you don't have to be. You can go direct to Ali, but you will pay the full price, which basically makes my membership free. So I recommend you do it my way. However, if you choose to go directly with Ali, and without going onto my channel, you can. And let me give you Ali Tizro's link, and don't forget the links are below all my videos as well, in the description of all our videos. Okay, so there you go. Now then, what will you see when you get there? I'm going to show you what you see on Ali Tizro's tips. If you go to his server, I will give it to you now, and you can see exactly what it is. This is the Tease channel. Of course, we don't want to give away anything. It's a premium service. These are the sort of charts and stuff that you get. And Ali will do them specifically for you. He'll answer your questions. He does live broadcasts, all that stuff here for you as well, okay? These are all the charts and tips in this list here, and we'll show you what stocks, what assets he's going to buy, when he's going to buy them, what the price targets are, the allocation, the percentage in the portfolio, the whole thing. So if you'd like to be involved in crypto, but you don't want to do all the charts, you don't want to work out what to buy, what to sell, and you don't want to, you don't have any experience of it, or perhaps you've not been successful, Ali's been successful doing this before. He's going to do it for you. And that's why I'm doing it with my real money. So this is actually my real money that I am doing it live on the show. So you might want to be part of that. So there you go. There's Ali's Discord server if you want to do that. Or you can go through my server, which will give you a lifetime discount, which will be cheaper for you. And it's for my members. Okay. And here is the membership of my server. Okay. And I'm just going to check now in the server if we do have Ali to call in and have an input. Let me have a little look, see if he's in the server right now. I don't think he is. No, he's not. He's not available this afternoon. But anyway, we've gone through 500 on our server. We're very excited about that. So hopefully we should be a public server tomorrow. We'll find out. See what happens. Okay, right. Looking at my position, let's go back to the questions. Andrew Grady called it 23,500. Still expect to see crypto fall though. Tomorrow will be dump all red stocks, says Mohammed Kahine. Well, we shall see. I don't think my portfolio is going to be red tomorrow. Honestly, I don't. I think my portfolio is in a very strong position. It's very defensive. It's been designed that way. I feel very confident. So, you know, I am not worried at all. In fact, if I share with you my overall position, this is where I am. Look, 36,687. If I go to my, look at this, new highs. 36,697 is in my main portfolio. Go to my Roth combined, 41.6. And I've got no margin, remember. No margin is pumping this up. This is all my own money. Phenomenal. Absolutely phenomenal. Very, very exciting. And if we look at it, we're up on the day, we're up on the week, we're up on the month, we're up on the year to date, 11.5%. No margin inflating this, remember. That's very important. 3 months. This is the one we want to get rid of. 21% down. So give it another couple of weeks, and then we'll start peeing up for 3 months. I think if we carry on like this and get rid of these highs here, it'll be nice to see it all across the board. But it is looking like I was right. I called the bottom of the market end of December. You can check my videos and you can see that's exactly what I said. That's what I said. And I stand by that. All right. I think we've still got more sell-offs. There's more down days, but the defensive stocks are what's protecting my portfolio. That's definitely what's protecting my portfolio. That J&J is making a huge difference to me today. All right. So let's go through it and have a little look. We are going to keep this show going now here, and then we're going to do the Meta earnings after hours. I think that would be the best thing to do. We're on 55 likes now. We're 45 likes away from giving a cash prize away. We made it up to 6,192. I predicted would be at 6,200 by the end of the show. 8 more likes. Do you reckon I can do it? 8 more subscribers by the end of the show. Do you reckon I can do it? I reckon. Ali Tizro is in the green room. Fantastic. Ali Tizro is in the green room. We've now had 402 through our event here this afternoon. Brilliant. Absolutely brilliant. Ali Tizro is in the house, so we can bring Ali in right now. So Ali, stand by. You'll be live on the show in a couple of seconds' time. Welcome, welcome, everybody. Our portfolio is still going up. We had a little bit of a sell-off when he left the stage, but we're still going up. A nice balance of high-risk stocks at the same time as having some very defensive stocks. Let's look at Meta right now. Meta earnings after hours. In half an hour, we'll get the figure. They have increased. The analysts have increased it. I'm expecting them to miss that. We shall see. What do you think? Do you think Facebook are going to beat a higher expectation? I think this is a pump before dump, to be honest. That's what I think. I'm saying it right now. Let's see if I'm right. Ford is up 3% today. CENN doing very well. All looking great. I've still got $1,200 as well. Look, I took $1,200 out of the stocks as well. So I'd be up even more, but I wouldn't because I spent half of it, which has gone up dramatically. Anyway, I'm holding my position. I'm holding my $1,200, expecting some dips to come. I want to buy some Tesla. That would be my number one. I've got enough Virgin Orbit now. I've got enough Virgin Galactic for now. I've got enough the S&P 500. Nearly 6% now. That's the highest I've ever been up on the S&P 500. 5.7. So let's bring Ali Tizro into the show. Let me go over to the broadcast lounge. And let's have a look. Let's see what Ali's brought. He's brought a chart with him today. He's brought a chart with him, so that's looking good. Let me bring Ali Tizro into the show. Just bear with me a second, and we'll bring him on right now. So, Ali Tizro, you're live on Martyn Lucas Investor. Good afternoon, welcome to you.
Good afternoon, everyone. Good afternoon, Martin. What a day. What an amazing day. Everything green, everything, crypto's up, stocks are up. Happy days.
It's great, isn't it? We do love this. We do love it. What do you think? I said the bottom was December. Do you think that was the bottom? And remember, most times we predict a bottom, we won't know for 6 months. Was it a bottom? Is there a new low to be set? Of course, we're going to get some red days, some down days. But what do you think? Do you think we've seen the bottom in December, or we've got a new bottom to make? What do you reckon, Ali?
It's very hard to make a prediction like that. I mean, if you're asking me,
well, I'm asking you to.
If you're asking me, I would say we're either going to see a new bottom or we're going to revisit the bottom. Put a double bottom in place, or we're going to go lower. That's my personal thought.
That was a very political answer. That was. You sound like a politician. That was a very safe answer. We're either going to hit the bottom. It either was the bottom, or we're going to revisit it. So he's covered two bases. I like that.
Yeah, well, it's very, very hard to tell. I mean, very interesting from Fed Chairman Powell today. I mean, he said a couple interesting things. Market reacted positively, I guess. He said they're going to need to basically raise the debt ceiling. That was very interesting. He also said
that means printing money, right?
Basically, yeah. I mean, he's saying he's saying that they're going to need to raise it, otherwise there's going to be a massive market crash if they don't. He's saying that he alluded to a recession coming. He also basically said that there's not going to be a major pivot, as in terms of he's not going to be lowering the interest rate. I think the issue here is now we're at such a high interest rate, and we're probably going to see a couple more. He said we're probably going to see a couple more. The market hasn't actually priced a couple more 0.25s in. If we see a couple more and then we hold it, that's where the real pain is going to come, when we're at these high interest rates for months and months. Right now, we're slowly going up, but we haven't been at these for months and months and months. So we'll see what happens. We'll see if a recession comes, or if we're in a recession now. That's why I'm saying we could revisit this low and go lower. But in any case, we trade the market day by day. So yesterday, I made some crypto purchases. Yesterday, I posted it to my Discord channel. It's not. I mean, everyone's asking me about this 1,000 to 10,000. Why are we not buying? Why are we not buying? Because I want to explain that the 1K to 10K portfolio, the 7,000 to 100,000 portfolio I have on my Discord, that's a long-term portfolio. That's what we're going to be holding into 2024, 2025. We want to find the best prices possible. Crypto doesn't go up in a straight line. It's going to come back down. We'll buy at better prices. But that's not all the Discord's about. I bought crypto yesterday, and I'm very up on it now. I had some long positions. I've closed now. There's a lot of things on the Discord. So when everyone's asking me, when are we going to buy this? Why have you not started? Why is Martin's just in cash? It's because that's our long-term portfolio. That's if you want to call it safe. That's our safe portfolio. Nothing's safe in crypto, of course, but that's our long-term portfolio.
You're taking care of me, Ali, right?
Of course. We don't want to lose it all in the same. But yeah, that's our long-term portfolio. There's a lot of different trades we do. I bought 15 different cryptocurrencies yesterday, and I'm 20% up on them. So this high interest rate, this is Sick is saying the same, saying that high interest rate environment hasn't filtered through the economy yet. I completely agree. This is the beginning. We're going to be in this high interest rate environment for the whole year. Maybe these earnings are good for this time around. Let's see what they're like next time around. We're still in a bear market. We're not making any higher highs. We can't say we've bottomed. So we'll see how it goes. We'll take profits if we go up, and we'll keep our strategy. We'll keep a clear head this year. We can't just FOMO into stuff. We have to be level-headed in this, the way the markets are now. A recession could be coming. We could be in a recession. There's interest rate hikes. We just need to keep level-headed. That's my opinions. I mean, we can see everything's going up. Tesla's back at 182. That's crazy to me. That's crazy. I mean.
Yeah,
I'm not saying I didn't think this was going to happen. Me and you bought Tesla back at 105, 110. If I'm talking personally, I bought. If I can show you a chart, bought Tesla.
Let me put the chart on the screen before I share that chart.
Yeah,
I just want to show this one here. This is very telling of manipulation, right? Look at this, guys. Yesterday, the SoFi CEO said they're expecting 2 rate hike cuts this year, and people have believed that. And look at this today. SoFi is up 7.2% on rate hikes, cuts that are definitely 100% not going to happen. There's not going to be 2 rate hike cuts this year, and that is what's fueling a 7.14 right now pump on this stock. Absolutely insane. So it's great to see your portfolio going up. I'm thrilled to bits. I mean, my portfolio is so strong this year, and remember, I've got no margin pumping it. So this is not like a false pump. This is the real deal. This is just cash on itself. And in fact, I've got $1,200 out of it at the moment, so I would be up even more. I am not buying anything. I repeat, I am not buying. I'm already in. I've already bought the dips. You don't buy the pumps. For God's sake, don't feel that this is it. FOMO, I've got to buy everything. It's all going up, because you'll get caught. We've all made those mistakes. You should have been. If you follow the show every day, you will know when we're buying in, when the dips are coming. Now enjoy it going up and maybe trim like I trimmed yesterday, but don't suddenly jump on the bandwagon and think, right, I'm going to buy all these prices. And I think one of the worst things you could buy, not only is SoFi, but Tesla. I think this is a terrifyingly high price right now. But again, that's what this stock does. And I'll share. Let's go to Ali's chart. If we're going to talk about Tesla, let's talk about Tesla. What do you think of this? This is insane, isn't it?
I mean, it's crazy. I mean, this is what the markets are about. They are crazy at times. I mean, if I just go through a couple of trades we've made in the last 2 weeks, we bought Tesla at 105. 105 we bought Tesla. We sold Tesla at 155. 50% increase. We sold it. Great. We shorted Tesla at 179. Took profits at 165. But that's perfect. I'm not in Tesla right now, but if someone's asking me what do I think Tesla's going to do, it can shoot up to 208. Tesla's in the mind of its own. It can do whatever it wants, but once again, I do not think Tesla's going to perform brilliant this year. I don't think a lot of stocks are going to perform brilliantly this year. I think these interest rate hikes, the effect is yet to be seen. I can't think anything's going to go up in a straight line yet. We're going to at least revisit some lows. So I'll be really careful buying now. If you've got, I've said to people, when people ask me, oh, shall I sell my crypto because you haven't bought anything in your 1K to 10K yet? I said, no. If you want your crypto, keep it on the side. You yourself have your Bitcoin in your ledger. I never told you to sell that, and that's been going up. I haven't sold my personal Bitcoin and XRP, but I'm leaving cash on the side. I mean, 75% of my cash right now is on the side. I'm only 25% in the markets. So there's a lot of trades to be made during this bear market. I mean, Tesla 183, crazy. I mean, if I go through some other, let's see what other stocks are. Before I go on to cryptos, I'll quickly see what stocks. Coinbase. Wow. Do you remember when I tipped you to buy Coinbase?
Yeah. Best tip you ever gave me, that Ali.
Can we show on the screen how your Coinbase is doing?
Why did you say before I give you all the glory and tell you how before I give you all the glory and tell you how wonderful you were, the only thing that you did wrong was not telling me to buy more.
It's very hard to convince someone to buy.
That's what you should have done. Coinbase, I am now up. Ali, I think you're behind the stream a little bit. Just catch up with me a little bit. I am now up 87% on my lonely one share. Right? So these are the sort of quality tips you get from Ali, right? Right? Brilliant. Just should have been, can you buy 10? I bought one. I'm up 87%, but that's fine. That's all that's the right balance for me. And there's my Roth. Look at that, folks. That's 2 months old. That portfolio, 1.76%, and no, that's today. Sorry, I'm actually up 3.38% on a Roth IRA with a 1% match from Robinhood. Remember, I'm nearly maxed out now in just 2 months. I couldn't be happier, and I just want to say what's doing the best guns is the S&P 500, J&J. That's making me the most money. Defensive stocks, Amazon's doing great. Tesla, remind people, I still do have 2 shares of Tesla. So anyway, I'll keep those in my Roth. But let's go back to Ali. We are getting this double sound coming through again, Ali.
I should buy a microphone for it.
I don't know what it is. Normally, I think normally wear a headset. I'm just picking
I'll make sure I get better next time.
Okay. Carry on.
Yeah, let me see if I can connect if you want to go back, I'm just going to connect my headphones.
Okay. Yeah, you're just breaking up a little bit. So we'll have Ali back in a second. We'll come back to Ali in just a few moments. I'll just allow him to mute that a minute. I'll come back to him in a second. Let me just mute that a minute. And I'll come back. I'll come back to you, Ali, in a second once you've got yourself organised there. So Apple, as you can see, is doing great today, 1.3 to the overall portfolio is now moving up. We've got 15 minutes to go before we end the show, and then we're going to go to Meta earnings. Ali, I will be back with you in just a couple of seconds. The overall portfolio is holding up. Stephen Lewandowski has been a bronze member now for 5 months. Go into your super chats and see if you've got any free memberships. You might have some. The S&P is up 1.5 today. I'm up 5.86 now. Virgin Galactic is up. Virgin Orbit. I think Ali's just dropped off a minute. We'll stay in the broadcast and see if he comes back on again. But he's just dropped for the minute. So let me join the Discord. Are you going to come back in, Ali? We just lost you for a minute. You're going to come back in. Virgin Orbit. Back in 2 minutes. Okay, great. Rivian is up 2.63. Tesla is up 5.43. I still think it's a very dangerous price. Lucid, I'm not going to buy it up there. Apple is 1.17. Amazon 2.56. This is all good stuff, really is. 5% now I'm making on Amazon. Absolutely awesome. I've got friends who've got millions of shares of Amazon. I bet they're celebrating today. Coca-Cola, J&J, great. Google. We'll come to Tilray in a second. Microsoft, big story today, 2.41. Walmart up 0.81. Tesco up 1.26. Next, Era Energy. Oh, just getting a bit of a sell-off now. We peaked up, and now it's being sold. So be careful. Tilray, 3.91. Very nice indeed. SPY's falling. Mike Jones says SPY is falling. I have an iPhone 13 Pro Max, no free memberships. I have an iPhone 13 Pro Max, no free memberships. I'm sure there's a joke there somewhere. I can't think what it is. Let me have a quick look. Amazon tomorrow. You think Amazon's going to fall tomorrow? Oh, Amazon's earnings is tomorrow. Yes. For those of you who don't know, tomorrow, Amazon, we are actually covering There's Google and Apple. We're covering Apple tomorrow. Can't cover them all, I'm afraid. I'm going to cover the Apple earnings. We've got Amazon, we've got Google, and we've got Meta today after the show. So we will be covering Meta very, very soon. Awesome. Bear season is still open, says 22. Here you go. We're just getting a bit of a sell-off now. I'm keeping my eye on the phone and seeing if Ali rejoins the party. We are about to wind up today's show and go over to the Meta earnings. That's coming up in a few minutes' time. Right, we're at 57 likes now. Let's see. If we can get to 100 likes by the end of the show, we'll give away a cash prize. Click subscribe and ring the bell. There you go. We are now at 57 likes. And let's see if we can get up to 100 likes. There's 56 watching, 57. We're looking good. Very healthy. Let's see how our channel has grown today. Let's have a look, see how we're going. We're up to 6,192. I said we'd get to 6,200 by the end of the show. So we're getting very close. We've now had 435 come through the stream. The thing that everyone's looking for the most is FOMC report. So that's interesting, as expected. So anyway, it's time to bring everybody up to date. And we will see if we can get Ali back on the phone. Are you ready? So here's a quick commercial break. See you back in 10 seconds from now. If you are a YouTube sponsor, you could be in this space. Ali Tizro is one of our sponsors, and that's why he's on the show today. Fantastic. There we go. Time for puts, says Mike Jones. Markets take the stairs up and the elevator down, forget. That's right. That's a good way of putting it. I like that. I like that. Let me go back over and see if Ali Tizro is in the house. There he is. Right. Just going to check now. We've got 500. I'll bring Ali back in again. We've now got 500 Discord members. We've now got a public server, or it will be once I've registered it all. Hopefully it'll all go through. Click the Discord link there. Come on in. You can have your say. If you want to talk directly with Ali Tizro live on the show, you can. It's free, but if you want to access the phone and call in and all the exclusive channels, you need to be a YouTube member. It's a couple of bucks a month. There's a reason why 95% of our live viewers are all members. The highest engagement rate of any YouTube channel. We're very, very proud of that. Anyway, I've got Ali Tizro back on the show, so let's have a little look. Let me just bring him back in again. Let's have a look. All right, I think we got Ali back on the call. So I'll unmute you a second, Ali. And Ali, we've got you back on. How are you? Are you back on again?
Yeah, I'm back on. Not without the charts, unfortunately. So maybe another day I'll call in and show some more charts. But I think just my parting thoughts is just be very careful in these market conditions. It's just never forget that taking profits is always a good thing to do. I don't think this Fed meeting was as bullish as people think. I mean, we've seen it quite a few times now where a Fed meeting comes, markets pump the next day, absolutely really, really big dump. So really be careful, do some risk management. We've got a very, very rocky year. I think it's going to be a year of accumulation, a year of ups and downs, a year of FOMO and the bad news. So
it's actually a great year for a long-term investor. If you are retiring last year and this year, it's awful. If you're relying on your pension, you're relying on your stocks to provide a pension, it's bad. However, if you're investing for the next 5, 10, 15, 20 years, this is great. Just make sure that you've got some money on hand. I took some profits. I've got $1,200 right now. I've got $2,000 a month coming into my portfolio in addition to that $1,200 that sits there. And we're just waiting for things to go down. Now, because we have had a global pump, I mean, literally every stock I own has gone up. That doesn't mean to say tomorrow every stock is going to go down. Some stocks will stay up, but some things will get punished. And tomorrow I'll be fishing and looking around for seeing the stocks that I like that are on discount. So that's the way I'm playing it, Ali.
Yeah, it's a great way to play it. I've been playing it the same way. I mean, surprisingly, I've made a a lot of money recently. I mean, I'm not gloating or anything. I'm just saying these market conditions doesn't mean you can't make money. You can buy the dip, sell when you make some profits. I mean, there's been so many bear market rallies, and I think this is another bear market rally. So I'll continue to take profits. I'll continue to make trades. I mean, all my trades are on my Discord. I bought a bunch of crypto yesterday, 15 different coins I bought. That was on my Discord for everyone to see. So far, it's played out well. I'm not sure if it's going to carry on to play well. So I'll keep everyone on my Discord up to date on exactly what I'm doing. I'm not saying follow me. I never tell anyone to follow me. I'm not an expert. I mean, I've done it before. I've made a lot of money with cryptos, but I'm not ever going to tell anyone to buy. I'm just sharing my thoughts because a lot of people ask me. So I've created
Well, you
a
better
service
tell
for
you
people.
better tell me when to buy, because if you don't hold my hand and take me down the path, Ali, I'm going to get lost as soon as we go into the woods of crypto. You're going to disappear behind a tree somewhere, and I'm going to be going, Ali, I don't know what to do. So you've got to tell me what to do.
No, I'll definitely tell you what to do. We're going to build a very strong portfolio, a very strong crypto portfolio for a long-term position, for a 2-year position. For if we're serious about investing and we're not doing any sort of degen moves, what we're doing is creating a solid 1 to 5% of a portfolio that you hold for a long-term position, for a 10-year position. So what we're going to do is we're going to look at high value zones. We're not going to FOMO in. I might not buy for 3 months, but that doesn't mean you shouldn't join my Discord. We have a lot of different information there. But if you're looking for a quick way to make money from this 1K to 10K, it's not. It's a long-term portfolio. I consider it a safe. It's weird to say safe along with crypto, because crypto is a very volatile market, but it's as safe with enough risk to make some good money. So that's what the 1K to 10K is. I'm on the 7K to 100K.
Well, that's what we want. We want sensible advice, thoughts based upon some kind of fundamental chart reading strategy and so on. What we don't want, and what this YouTube channel will never be, is a channel which is about sensationalism and get you to watch and make me money as a YouTuber, because I'm telling everybody we're going to get rich in 5 minutes, buy this coin today and we're all going to get rich. There's plenty of YouTubers that will do that for you. We want you to look back on this and go, we love this and this is great and we can rely on it and it's true. We make mistakes all the time, but overall it's balanced and it's based upon the principles and the knowledge, not based upon how I can get myself rich in the process. That's not what this is about. It's not about me. It's never been about me. It's been about you. And it's why I'm involved with Ali, because I know Ali feels the same way towards my channel and wants it to to be that way for you. So that's very, very important. I just read the comment there from Mike. See, he says that my retirement is cut way back. That's it. People that are retiring last year, this year, are really, really struggling. And that's it. So this is the time to accumulate for the next 5-10 years. Ali?
Yeah, it is very sad to see that retirement is being put back for a few people, for quite a majority of people. What would I say to those people? If you can push it back another 5-10 years, I mean, I'm not giving advice to it, I'm just saying it. 5 years, hopefully we're back up and you can accumulate some at lower prices.
Well, the people that are just on retiring now, most people have the option. Not everyone, I understand, but most people have the option to go another year or two, right? To say 10, 20 years, no, because now you're going to be 80, 90 years before you retire. Of course not. No one's suggesting that. But if you are in a position where you can push it back a year or two, this is the time when you can really, really boost your portfolio, because you're now buying some stocks in your portfolio which could be down 80%, and there are stocks still like that. There's many stocks down 50%. So if you can go another year or 2, year and a half, 2 years, and keep buying up those dips, your portfolio is going to be really healthy in a couple of years' time. It may not be the greatest portfolio, of course. It might, it's only had 2 years to grow, but nevertheless, when the stocks are down, that's the time to add, and you can buy double what you could a year or so ago. So this is a good time if you can go another year and a half, perhaps. Ali?
Yes, I agree. I mean, I know that people can have of the option to push it back 1 to 5 years. Anything more than that, I mean, I understand that would be silly to do if you want to retire, but yeah, I don't have too many thoughts on that. I've just seen Andrew Grady say show the rainbow chart. I mean, I can't actually show the rainbow chart because I'm not on my laptop, but I mean, there's all sorts of charts by here, by there.
Is that on the Discord anywhere?
I mean, yeah, I'll put it up on the Discord. It's just not something I look at too deeply. I mean, each market cycle, they redo it. I mean, even I'm not sure what Andrew Grady is specifically talking about, but the rainbow chart didn't even hold up. It went a good 10, 15, 20% below it. So it's so it has deviated from it. But yeah, there's all different types of charts. I mean, if anyone wants anything specific, they come on my Discord, they ask for it. I give my personal opinions on it. But yeah, I mean, there's not too much more to say. We'll keep an eye out on this pump. We'll see how far it goes. I'll give specific charts to my Discord members. I'll put my link in again. There is still a discount code for the next 2 members for 50% off. I mean, I'll put the discount code there. But other than that, if you want to join, you can always go to Martyn's Discord, get 15% off. But that's a 50% discount code there for the next 2 members for the first month. If you like it, you like it. If you don't, you can unsubscribe after the first month. There's no obligations here. You can see I'll put the discount code there in the chat. Please join, ask any questions, ask as much as you like. The point is to get value out of it. But yeah, be very careful in these market conditions. Nothing goes up in a straight line. And when it does, it normally comes down even faster. So I'll leave you with that. Thank you for having me on.
Pleasure.
But yeah,
pleasure.
Thank you so much.
Ali, thanks for calling in. Always a great call. Thank you ever so much indeed. Speak to you in a bit. There's Ali Tizro. Someone just asked in the chat, how old is Ali? Ali's actually 12 and a half years old. He sounds older than that, doesn't he, really? I'll let Ali answer that question for you if he chooses to do so. I think it was MSK. He says, how old are you, Ali Tizro? So there you go. Ali can share that with you if he wants to do so or not. That's entirely up to him. I'm actually 53, I think. It'll be my 54th birthday next month. Always a good time in March. Always a good time for my party. Yeah, always have a laugh. Anyway, that's coming up in a month from now anyway. Ali Tizro, 95. Yeah, I thought you were about 95. When you told me you were 12 and a half, I thought, no, get out of it. Right, okay. The bell has just gone. We're in the after hours now. Let's ring the bell. Bing, 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 bing. There we go. It's time to end the show. We've got, of course, what do you call it? Meta earnings coming up in half an hour. Meta earnings live on the show. I'm going to give everyone the link right now because this show won't go directly there. It was set to go to the other show. So anyway, here you go. Here is the Meta earnings. If you go there now, leave a comment, leave a like, click reminder. We're going to be tuned into the official Meta earnings. There it is. Normally the video goes directly there, but we skipped the closing bell because this show it was extended. So there was no closing bell. Right, roll the credits. We've also got, day trader of the day. This will be an interesting one. Day trader of the day. You ready? Let's do day trader of the day. Constant Courage is over there on Discord, TikTok. Who's our number 1 this afternoon? You look so much better without a beanie. Thank you very much. All right, day trader of the day. I'm up 0.93. You ready? Up 0.93 percentage points. All right, let's see who's up today, who's up and down, and if anyone's down, I'll be surprised. In fact, I'd be very surprised. Okay, you ready? I'm up 0.93, 1 minute on the clock. Some big scores here. See, with defensive stocks like mine, I move very steadily. There's nothing dramatic, but it's a steady climb. That's what my portfolio is about. I can't do all the stress like you guys. I think I'd have a heart attack. All right, up 3%. Very, very nice. Up 3%, says from Crag. We've also got German Gaming up 9.6. Portland Trail Blazers up 10%. Andrew Grady, no bloody idea. No bloody idea whatsoever. SNP. What am I thinking? The SNP. Like What are you saying? All right. Neil Carver is up 2.12. Not checking till Easter, just as well. Stephen Lewandowski 2.77, but Portland Trailblazer does take the biscuit this afternoon. Takes the biscuit. Thank you very much indeed for your honest trade. Give him a thumbs up, and let's give him the sound effects. Come on, let's do it. Very good indeed. Down 10.7. Ian Jackson, bloody natural gas. I wouldn't invest in natural gas, I'm afraid. That's not for me. Sorry that's happened to you. Not good. Dunkey is up 0.02. Trading 212 doesn't get you a percentage as far as I can tell. Also, decent refresh your trades. Roll on Robinhood. I'll bring it to you when it does. You know I'm going to bring you Robinhood when it does come. The day it comes, you know it's coming. German gaming, yeah, natural gas is very volatile. Indeed, it is. I'm not in it. I don't know nothing. I know not enough about it to comment, okay? Let me close the broadcast lounge. I don't see anybody in there now, so let me close it down. There we go. The broadcast lounge is closed. Today, we hit 500 Discord viewers. If you want to be our 501st, hopefully we'll be a public channel tomorrow. That's why I play it, says Ian Jackson. There you go. There is the Discord server. We're now a public channel. At least we will be, hopefully, once I've ticked all the boxes. Anyway, go over to the welcome all. That's a good day. There we go. Mike Jones Meta pumping. It's going to be sold off, though. I'm sure of it, because their expectations was raised. And I don't see them beating it. But we should have some information right about now. Let's go to Meta. Let's refresh. Oh, have they beaten it? Here we go. We've got Meta. Sorry about the strobe there. Let's have a look. Are they beaten earnings? It's not showing they have. I think that's a pump before the dump because of everything today. I can't see it. I can't see it. He must be a betting man, says MSK. I can't see that going up. That to me looks like a pump and dump. I might be wrong, but I reckon my thoughts are they missed on expectations last Q2, missed expectations, which was lowered on Q3. They've raised expectations. So to beat that, when they've missed on everything else and they've raised it, I would say the odds are against it. If anyone can share that, we'll be back in a few minutes' time for the Meta earnings. If you want to join me for the Meta earnings, here it is. We'll be back for Meta earnings in just a few minutes' time. So I'm going to end the show right now, get out of here, roll the credits very quickly, and we'll see you all back for Meta earnings in just a few minutes. We're at 62 likes. If we got to 100 likes, we'd give a cash prize away. So we're not quite there. Smash the like button, subscribe, ring the bell, and you'll go over to our Meta earnings. Are you ready? In fact, I'll tell you what I'm going to do, because we have so many people here, I'm going to make it nice and easy for you. I am going to go now into the video, and I'm going to edit the video a second to take you directly to Meta earnings to make it even easier for you, okay? I'm going to make it even easier for all of you. Are you ready? Here we go. Just give me 10 seconds. As we roll in the credits, let me bring up the credits right now. Here we go. I'll do it at the same time. Okay, let's take this video directly to Meta earnings for you. Make it nice and easy. Let me bring up the credit screen. Let's see if I can bring that up for you. Customize this service for you right now. Here we go. Here come the credits. Let's roll the credits now and see if we can do 10 things at once. We can do 10 things at once, can't we? It's not that hard, is it? Okay, here we go. All right, let's take this video you're watching right now automatically to the Meta earnings. There you go. That's done. Yep, that's done. Thank you ever so much for all the followers. Look at all these new followers today. hundreds of thousands of millions of new followers. Look at that on Twitch today. We are getting some bot attacks. I don't think they're all real. They might well be, but I'm not so sure they're all real. But anyway, thank you for all the follows. I'm not so sure they're all real. But however, 40 billion buyback. Is that what it is? 40 billion buyback. Meta. That's what's pushed the price up. But I doubt if they've hit on earnings. Wow. All right. See you back in a few minutes. You'll go directly to Meta earnings. See you back in a couple of moments. Don't you dare go far away. See you back in just a few minutes' time. In the meantime, take care of yourselves and each other.